Yeah, so very interesting point that Robert just brought up. I want to talk about this. Some other issues we might debate on Friday. Not debate, but um, other issues that I would like to help you in suggesting ways to attack this problem. And what are the effects of having a higher marginal tax rate on the wealthiest Americans, the people who have the most? Um, One thing it could have an effect on is the intergenerational mobility of this country. And that is people who are in the top 10% of income earners in this country are there. If you take them and look at their children and see, okay, what percent of income earners are they in? How many of them are also in the top 10%? If you look at this country, it's very high. It's like over half of the children of the richest people end up also themselves being the richest people. And that's the United States. If you compare that to other countries that are similar to have economies that are similar to us, they're Western style capitalist. Maybe the regulations are different, but you know, a country that's similar in profile, it's way less than that. It's like only 25% of the top uh, earners children are also the top earners. So my point is that there's always going to be some stability between generation over who has. We're not just talking about wealth here, though. You would expect wealth to be preserved, wouldn't we? Do you know what I'm saying here? The difference between income and wealth. They sound similar, but they're actually vastly different. It's like the difference between debt and deficit. It's very similar to that difference. Why would I say? Here's a question to you. See if you believe me, if you agree with me. We would expect wealth to be um, pretty constant across generations, meaning that the people who are the absolute wealthiest, probably their children are going to inherit a lot of that wealth. Um, I think that sort of makes sense because, um, well, I mean, that's part of the ideals we have in this country, that if you make a lot of money in your life, you become a very rich, very wealthy person, then you have the right to bequeath that money to your children, and then they have it after you're gone. Something like that. This is why the Walton children are the richest. If you take a list of the richest people in the world, many of them are just the children of Sam Walton, because with Walmart, he amassed such an enormous fortune. And when he passed away, that just trickled down to his children, who then became among the richest people in the world. And some Americans think that's not fair. That's a terrible thing. Why do we do that? Others think it can absolutely be no other way. The government doesn't have the right to take away. It's called like a death tax, right? Why should we tax people just because they died? Of course, that's the term of those who believe it's a negative thing would call it a death tax. Those who think it's just a normal thing, they might call it an estate tax. It's when your estate is taxed after you die. That's called an estate tax. So because we have estate taxes in this country, but they're not terribly high. That's why there's a lot of permanence in wealth going from one generation to the next. But what about income? Why should rich people's kids also have a higher income? Right? It's not that their parents are just handing them this wealth. We're talking about income, how much they earn. Why is it so high in this country? Well, we think I actually have a paper I want you to read about this. But of course, you're not responsible for it yet. But just let me say to Robert, who he asked me the question, like, what else can I talk about here if I'm running out of ideas? There's a paper on Blackboard called, I think it's called Intergenerational Mobility. Take a look at that paper. You might get some ideas for other arguments that say we should have a more progressive system in this country. And it's one way to combat income inequality. I mean, of course, there'll still be different incomes. No one's saying everyone should earn the same income. I would hope not. Maybe if you're a communist, you would say that. But that's not what this debate is going to be about. We're not saying, should we go to a communist system in this country? If you think that, this is going to be, this is going to be a tough debate for you to try to win us over on that. But what we can say is that those people who do end up with really high incomes should pay much more of a percent of their income than people with very low incomes. And talking about intergenerational mobility will help that argument, I think. Yes. Oh, by the way, there's something called the Great Gatsby curve. Let me put this in chat. Oh, sorry, Colin's been chatting. I didn't realize it. They're more likely to have connections, be able to afford it. You answered my question. Sorry, Colin. Sometimes I don't notice the chats. Let me just say can I read what Colin said in case somebody wasn't paying attention, like me? They're more likely to have connections, be able to afford an education, are able to use all that wealth as a baseline to develop larger incomes. I totally agree. If their fortunes are large enough, they can live off the interest gains on investment. Oh, good point. So Ryan is saying not only do they generate income in the form of like a salary, but they generate income in the form of capital gains. Do we understand? I think it's worth it to make this distinction between a salary that you generate from working, could be wages, could be salary, but income from working versus income from capital gains. And we should talk about that too. Robert, you could talk about that. Talk about the difference between how capital gains are taxed and income is taxed in this country. Let's take a deep look into that, if you don't mind, on Friday. Right? I mean, okay. I didn't tell you exactly what this debate was going to be over, and I sort of purposely left it a little vague. What I would love is if you ran with it, with you thought about kind of the best way to attack this debate in a persuasive way. If you start talking about how capital gains in this country are taxed at such a lower rate than income, and talk about what that does to this economy, I think that could be an interesting debate. So when I say progressive, I'm talking about everything, right? Just not just the income tax on earned income on wages, but also on capital gains. You can even think about estate taxes. Go ahead and think about estate taxes and how progressive are estate taxes, right? Let's make sure everybody knows what I mean when I say progressive. Maybe I need a slide does everyone understand what we're debating on Friday? This idea that Robert is supposed to argue that we should have a more progressive tax system in this country. That means people with the highest income would pay a higher percentage. It could also mean people who make a lot of money with capital gains should pay a higher percentage of that taxes. Also, estate taxes. If you have an estate worth $10 million that you're going to bequeath to your children after you die, how much of that 10 million should be taxed? I would hope, Robert, you're going to argue that a lot of it, more of it than it is. That you in your opinion, I shouldn't tell you what your opinion is, but in your argument, you can let me help you out. I don't want to give you everything. I'll just give you this one thing. If you compare somebody who makes $100,000 by working versus somebody who makes $100,000 by just inheritance, who has to pay a higher tax? The person who made the $100,000 on income, or the person who made $100,000 on inheritance? It's actually the income. The person who made that money working, as currently the tax code is written. So take that. I won't even tell you how to argue about this, but hopefully this is some stuff we'll talk about Friday. Myron is not here, so he's not getting help from me, I guess. Maybe he'll watch this. Maybe I'll post it on YouTube and he can watch this later. Okay. Are there any other questions? Let's talk about a bit more about taxes before we have our quiz. Oh my gosh, 12 minutes before the quiz. Oh, by the way, did you guys read? You were supposed to read this article about taxing the behemoth. Did you read it? It kind of starts manual. Great. It talks about Tim Cook, the CEO of Apple, and this was a real thing. Of course, it's not fictional. I gave you something that talks about a real event, and he shows up at Congress and everyone's kind of yelling at him. I don't think he even expected to be like harassed so much as he was by the Congress, and I'm sure some of them were kind of using him as a punching bag. I'm sure that was happening, but I'm sure in his mind the company Apple hasn't done anything wrong. They're following the laws that were created. They're not breaking the laws. At least that was their claim. Do you guys agree with this this criticism of Apple? Or did you sympathize more with Tim Cook saying, gosh, what am I supposed to do? What do you guys think? Do you have any reaction to that reading? Maybe you don't. Maybe you don't remember that part of it. I think that was towards the very beginning. But anyways, it's hard to sympathize, but the economics makes sense. Technically, nothing wrong, but it doesn't seem right at the same time. Okay. Good, nuanced answers. It's sort of like yes and no. I agree. And it's about corporate taxation, and we talked about repatriation last time, but they brought that up too. The behemoths are corporations. Did you see what it said about like the Cayman Islands? and how much I forget exactly the stat. I didn't read it right before this class. I've read the article, but there's this enormous amount of money that's headquartered in the Cayman Islands that it's just absurd compared to whatever economic productivity is actually occurring in the Cayman Islands. It's like 100 times that, or 1,000 times that is being stored there in a sort of virtual way through these headquarters as a way to avoid paying taxes. Okay, and I think the article is sort of written in a way to try to shed light on that, and try to make us think that there's something fishy going on here. Maybe there's a better way to do this. Good arguments on both sides, but tax laws are made to get away with this stuff. Do you think we should change taxes so that people don't get away with this stuff? Tax laws, I mean, because let's at least agree that maybe some tax laws are there for a reason. I say this a lot in terms of deductions. Some people think tax deductions are, they're just loopholes that people can take to avoid paying taxes. Well, possibly, but you gotta think about why was the tax deduction there in the first place? It's there because the government is trying to give you some incentive, or it believes that you deserve some benefit in the form of a tax break. And so I don't believe tax deductions or even tax credits are themselves a bad thing. It does make taxes more complicated. And of course, it would be nice for taxes to be really simple. I remember the Republican nominees, the candidates often said, we should have thanks, Ryan. Cayman Islands have 547% more profits coming from US company relative to their GDP. 5.5 times Their entire GDP is the dollars of profits that are not just revenues, but profits of these companies. Yeah. Individual shareholders or products through higher prices would have to pay for it. Yeah. So, you know, the article I think gives you both sides. Great. I forget what I was talking about. Oh, just wrapping up my point that tax laws are generally in there for a reason. And if the reason is good, even efficient, let's talk about economics here. What do we want our tax laws and our government policies to be? We want them to be efficient, to sort of get the most out of people's productive resources that they can, not waste them. And it could be that that goes to that goal. That, you know, by making people change what they do because of a tax deduction. Like, okay, I want to do this. Well, here's an example, like energy efficient stuff. You can get a tax deduction if you have a lot of energy efficient appliances. It's something you paid for. You get a tax deduction. Why does the government do that? They want you to switch from appliances that use a lot of energy to appliances that use a little energy. That's actually more efficient for the country. If we all switch to these, you know, the light bulbs that cost a little bit more, but they use less energy. Okay. I also wanted to say in like 6 minutes what the economists would normally say are some of the more bad things about taxes. I talked about a little bit, but let's, oops, no, I went to stop share. Let me kind of finish this. What happens when taxes are levied? Editing from current slide. I have this idea that first of all, let me just say something about sales tax. Sales tax does cause this deadweight loss because people who are really close to wanting to buy the product, they're not sure if they're going to buy it or not. But if there's a big sales tax on it, they may decide, "Now I just don't want to buy it." That's what we mean by a deadweight loss. And this idea of an excessive tax burden is very, very rare. Let me just say that's very, very rare. That means you tax something so much that whatever the benefits you get as a government in the form of taxes on that thing are smaller than the cost to the market of something being taxed. Another thing I wanted to say about sales taxes, as a proportion of government revenue, they're very small. Take a look at this graph. This is a graph from, it's a long time ago, 2007, but the point is still there that almost all of the taxes that governments receive are from either income or payroll, and payroll is pretty much the same as an income tax. It's just being paid by the business. An income tax is being paid by the person, the worker who receives the income, whereas the payroll tax is being paid by the business. They sort of automatically, they have to pay it. Doesn't matter. Corporate taxes are actually relatively small relative to the other ones, and that includes sales taxes. Sales taxes are only part of this really small other thing. So so I don't want to worry too much about what happens with sales taxes. We should think more about what happens with income taxes, because that is where most of the government income comes from. And I have all these points here. Let me just point to this first one, labor leisure decision. If Myron were here, it would help him with his debate. But some people say income taxes are bad because it affects your labor leisure decision. Do you guys know what I mean by that? What do I mean by that? What do economists mean by that? This is something specifically a labor economist would put in their model when they're saying, you know, I want to tell you a lot. I want to tell you about the world of macroeconomic structural estimation modeling, where they have a representative household that's making a decision: how much labor versus leisure do I provide? And I think I got a chat here. How much time you spend on working versus leisure? Yeah. So how is that affected by an income tax? What do you think? let's say you have a big income tax versus a really small income tax. Which one would make you want to spend more time working? Would you guess? According to labor economists, the small income tax would lead you to want to work more. Probably. That's generally the assumption there, and therefore, I don't know if I personally buy this, but the argument is the higher the income tax, the higher the marginal rate of your taxation, the more incentive you have to just not work as much, to choose something more like leisure instead. Or, the labor leisure doesn't have to be sort of an on-off switch. Either I provide labor or I consume leisure. It could be also the types of things that you want to make. If you're thinking about going into a like, let's say a law firm, your first few years you're working 80 hours a week because you're trying to make a partner, and you're just associate attorney who has to work really hard. You're putting in a lot of your own labor in there, and you're getting some salary from it. And when you get partner, you're going to get an even bigger salary. The idea of this is that if that salary is really taxed like a lot, like let's say it was a 60% income tax or a 70% marginal income tax rate, then your incentive to work so hard to become a partner goes away. You're like, ultimately I won't be making that much more money if I become a partner. Why should I go through this process of working really hard to become one? And some people would say that's a bad thing about income taxes, about high and very progressive income taxes have this problem. If there were flat taxes, it wouldn't have this problem, right? By a flat tax, I mean sort of the rate at which you have to pay taxes is the same. I'd imagine Myron is going to argue this a little bit, or if he doesn't, I will, or anybody who wants to step in and sort of play the other side. So I bet it's about 10:30 now. Okay, so that is one argument against having a very progressive tax rate, right? Do you guys see at least the argument? You might not agree with it, but at least understand why some economists believe it would be better to have not a progressive tax, but a pretty flat. Flat doesn't mean the total amount of taxes you pay is flat. It means the rate is flat. And therefore you have just as much incentive to keep getting a higher income when you at every point of the income bracket. Every income bracket, at every point you're thinking, well, I'd like to make even more money at the same rate. Okay, running out of time. I think we should start. Okay, and then here's what we said about corporate taxes. We'll talk about this later. Like what the Warren Buffett rule is. Talk about that. But hopefully you read this already, so you have some idea of what's going on with corporate taxes. Yeah. Yep. Oh, right there. It's 540%. Thank you. Maybe you saw that on my slides, or maybe you read it from the paper. But yeah, that is kind of a crazy number. I think I want to stop here. Do you guys have any questions? Any more questions about taxes? And I don't know what's bad about taxes, according to economists. Sales taxes, they cause this distortion. Income taxes, another distortion in the labor leisure decision. Corporate taxes, they cause businesses to go overseas, right? If you're a government and you're thinking, how should I tax people? There is no good way. There's no great way to generate your tax revenue without causing some distortion in people's economic decision making. I think that's one takeaway I would like you to have. Okay, let's stop there. No questions? I'm going to stop the recording too. And,